Welcome, guys. Today's date is December the 17th, 2018. We are coming into really the last good trading week of the year here. We have one more big news announcement for the rest of the year. That's going to be the FOMC statement, which is coming out on Wednesday. But I wanted to throw together this video. I've been talking about doing this for a very long time, and I actually woke up the other morning thinking about making this video. So what I've done is decided to do the video, and basically what the video is going to go over is really the first couple thoughts that I had when it came to creating my methodology. The methods that I use today are quite a bit different than what a lot of people will use. Also similar in a lot of ways too, but there's some things that definitely set me apart from the way that a lot of other people are doing it. So I want to go over these things and show you how I'm able to pick tops and bottoms in the market with about a 90% success rate. Now, prior to creating this method, which didn't have a name until a few years ago, but one of my students said, hey, this should be called CRT, a Calvin Ryan trade. So it is called a CRT trade. That is what people know these as if they qualify. With all of the different stipulations that I have to create the right kind of setup here. But what I did want to say is, prior to creating this method and prior to me kind of figuring out how things work a little here, I have been trading for several years already. It was not like this happened after 1 year of trading. I had a lot of knowledge about the market. In fact, too much knowledge about the market. And I had to ditch a lot of the things that I knew and understood as factual or truth to me back then because, well, frankly, they did not work for me. So I want you to understand that I had been trading for at least 4 or 5 years when I created this. I've been trading 15 years now. 2019 will be about 15 years. So the first 5 years, I went absolutely nowhere in my trading. I accumulated a lot of information, but that information did not help me financially. So I eventually said, forget all this. In fact, I went through about every possible forum on Baby Pips and Forex Factory. I tried every method that people had on there, and I was still losing money. I bought many courses, found some excellent mentors, and even under their mentorship, I was not able to make money. I was really struggling. So what I did was I took off every indicator, and believe me, I had a stash of like 100 plus indicators over in my indicator file here. And I went ahead and deleted every single indicator off of my chart, every moving average, MACD, stochastic, every magical indicator that I bought that would supposedly make me rich. I deleted every one of these off of my chart, and I have a bear chart. It looks very much like what you are looking at right now. In fact, the difference here is I do have my moving averages on here. I did not take those off, so the moving averages are still on my chart. But that's it. Everything else, it was a totally bare chart. There was nothing on my chart whatsoever. So anyway, let's jump into this. I just wanted you to understand kind of where I was at, how frustrated I was, how I was struggling, and could not figure this out. And so I had to kind of pave my own way here. But anyways, I want to go over a couple of the ideas that I came up with at the very beginning and where exactly this started, because I can remember the day I was sitting in front of my computer and I had one thought, and this was the very beginning of the way I began to profitably trade. So I can trace it back to that one thought that I had. And so I kind of want to share that thought with you so you can kind of get an idea of how you got to think outside the box and, to develop your own trading method. A lot of people are not going to like my style because I do trade counter trend. I catch tops and bottoms. A lot of people do not like that. So it may not work for you, but the purpose of this video is to kind of give you an idea of how I was thinking so you can potentially create your own trading plan, because a lot of times people will jump into a market because, let's say, for example, they say, hey, here is a trend line. Let's sell here. They sell here. They make some money. They get out at support down here, and then it comes back up here again. They sell again, and then they they're like, oh, well, how far can it go? So let's short some more and some more and some more. Pretty soon they've leveraged their entire account and they lose it all. You should not be trading like that, by the way. But the whole point is you can't just trade because you hit a trend line. You don't want to just trade just because, price is hitting a, certain support area. Let's say, for example, you look at your chart and you say, hey, look, there is resistance right here. And then we have resistance right here. And then we have resistance right here. And then we have resistance right here. So the average trader, especially a new trader, might say, well, this is resistance, so I'll short there. What happens? They short, the market continues to spike against them. Now, keep in mind, this was the flash crash, and so your broker may show different prices that don't necessarily go up to that the high, which I have on here as 97.32. But anyways, other traders may try to short right here and say, hey, this was a pivot in the market. Let me short here because the trend is down. Or they may say, hey, here's a pivot. Let's short here. The trend is down. After all, we just made a lower low. That's the mentality of a lot of new traders. And that may work for you part of the time, but most of the time it's not going to work. And you're just not going to do that well. So anyways, just want to share that little tidbit there. But when it came to me creating my trading methodology, the thought that I had was I was looking basically for a strong W pattern or M pattern anywhere on my chart, but it was not just any M pattern. It was not just any W pattern. The idea was I needed to see a massive leg off of this potential W or M pattern. So what I would do, here's an example. I would look for a really, really strong move in either direction. Anytime I see a strong move on a chart, that becomes a point of interest to buy or sell the market. In other words, if there was not a strong move, I was not willing to take a trade on my chart because I was looking for a reversal pattern. So, for example, right here you have a level. It's very obvious. Anybody can see this right here. Everybody's watching it. And so my thought was, okay, if I get a big bounce off this level and price comes back down to touch it, there's probably a pretty good chance this is going to bounce. And sure enough, price comes back down to the 77.50 level, which is a quarter point, by the way. Didn't realize that at the time, but it's a quarter point level, so it's likely to hold up as some kind of support. And what do you have? You have an immediate bounce back up to these regions right up in here, which is around the 80.50 level. So there we have a 300 pip bounce off of this level right there. And I was like, wow, no drawdown. But what I did was I went through my charts over and over, and I tried to find areas on my chart where there were big bounces. Here's another example. Really, really big fall off of this level. So what if price came back up to it again? I thought to myself, well, it should probably fall again, right? It should retrace, but it has to be a big move off of the level, an exasperated move like this. We came down a very long way. Did you have any real pullbacks on this? Not really. It just kept falling and falling and falling. So my reasoning was, well, this then becomes a big pivot in the market. So maybe if price comes back up to it, it should stop and retrace enough for me to make a few pips. And sure enough, it did. We came back up into these regions. You can see the double top right here. Hard to see maybe on the monthly, but on the lower time frame, you'd be able to see it. Price came back over to here. And what happened? We went a little bit above it, not much at all. And then we retraced very quickly back down into this region right here, 65.50 to 71.70, which is what? That is over 600 pips. So I, reasoned with myself, well, this seems to be working. So I continued to go through charts. Another example, by the way, is this right here. You can see this massive bottom formation right here. And so I reasoned, well, if price comes back down into this region, this is probably going to bounce. Let's throw up another chart. This is actually one that I've been watching lately. Let's throw up the oil chart. A lot of times MT4 likes to put lines up here that I don't put up here, so you can just ignore all this mess. But again, monthly chart, and I was going over this with my premium group tonight. You had a massive, massive, massive move up to the highs up here around June of 2008, and the markets crashed severely. They crashed really hard. So this massive sell-off, for whatever reason, was stopped right down in this region. How much of buying power do you think it's going to take to halt a move like this? Probably quite a bit. So I reasoned with myself, hey, this is a pretty big and obvious level that I should be watching for in the market. Why? Because not only did it stop price from declining in such a just rapid fashion, but look at the bounce on this. This was a dramatic bounce up. We came right back down to it, and guess what happened? We went just below it. Not a big deal. You dropped. Now, as far as figuring stops and just different things, a lot of times I'll talk in terms of grid bars. You can see these are grid bars on my MT4. That's why I like MT4. But you can see that we went less than one grid bar out of the money. Not a lot, especially since it went what? 1, 2, 3, 4, 5, 6 grid bars. If your stop was 1, for example, and you made 6, that's a 6 to 1. That's very good. So, but I reasoned with myself, wow, look at this. This was a massive pivot in the market. So this should hold up as support. And so I continued to go through different charts. Let's say the dollar yen, for example, right here. Well, actually, let's draw one up here. There's a massive pivot. Look at that fall off of that level. And then you've got another big one right here, another huge fall off of this level. And then you have this right here, another fall. That is a humongous fall off of this. And so I reasoned with myself, once again, what if we go back up to that level? What do you think is going to happen? It's going to fall again, obviously. So we stopped at around 124, 125, and we dropped all the way back down to 100. That's a 2,500 pip move on this monthly chart. That's a big move. That's 1, 2, 3, 4, 5, 6.5 grid bars once again. But again, it made sense to me that if there was a dramatic reaction off of a level, that would probably indicate that if it came back to that level, then, hey, it's probably a pretty good level to trade. But unfortunately, a lot of times what traders will do is they'll say, okay, let's see if we can grab these here. There's a pivot. There's a pivot. There's a pivot. And there's a pivot. And they will say to themselves, the trend is down, so I'm just going to sell these pivots. And a lot of times they don't even pay attention to the fact that the trend is, what the trend is doing, period. So they'll come in over here and say, well, let's sell this. And, well, it doesn't stop. So what they're going to do is they're going to say, let's sell the next one. So they double up over here. In this case, they got lucky and they said, you know what? I'm break even on this one, so let's go ahead and close out this order, which is a terrible way to trade, by the way. And then they'll maybe hold this or sell that also, who knows. But and then they'll come over here and they'll say, hey, here's another pivot, let's sell this. And it continues to blast through, and then it comes all the way back up to this major pivot, and then it falls really, really hard. So a lot of times that's how newer traders will trade. They'll think everything's a pivot and everything's a level, and it's not a pivot and not everything is a level you should be trading. So but what I did was I just went through different areas of the charts and said, hey, this could be a double bottom, this could be a double top, this is a major, major pivot in the market, and this looks like a good level to trade. But then I would continue to go through my charts here, and I would find myself in situations where the pivot didn't work. Now, when I was pointing out these pivots, these really, really dramatic moves, off of these levels, a lot of times I was probably getting about 60% win rate, which you may say to yourself, well, that's not very good. And it's not. But the thing about it is it was a lot better than what I had been receiving as far as my trading goes. I was not being able to make over 50%. A lot of times my risk was higher than my reward. In other words, if I risked $50 on a trade or $100 or $1,000, I might only make $25 or $500 or, whatever. I was making much less than I was losing on the average trade. Now my average trade, I'm winning way more than what I'm losing on a trade. So, and that's how it should be. But again, dollar CAD, let's point out some pivots here. You can see that you have a massive fall off of this level. So guess what? If price ever comes back up to this, I promise you, we are going to fall off of this level again. Not only because it's a pivot, but because this is an all-time high in my chart. That's a little bit of a nugget you may want to write down, by the way. But massive fall off of this level. And then we came all the way back to the bottom. And we had that's a big bounce. That's a very, very, very big bounce. So you have to think to yourself, well, what if it comes back down? It's probably going to work again. And then, of course, you follow your charts over. And then you see this level right here. And you say, hey, this was a big pivot. It fell really hard off of that. If it gets over here again, it should definitely fall. And, well, guess what? It seems to have kept going. And so you're like, why did that happen? And then here's another pivot. We had a pretty dramatic fall off of this. So if it goes up there, you think to yourself, hey, it's probably going to fall again. So most of the time, the pivots would work more often than not. But there were times when it didn't work. And so I wanted to know why. So that's when I learned that the market works in zones. And this is another thing that I added to my trading, because oftentimes I would see a trade like this, or a trade like this, or a trade like this. And what I would do is I would draw my line right here. And I draw my line down here. And I draw my line up here. Why? Because this is the bottom. This is the top. This is the top. And this is the top. What I didn't realize is the market doesn't always go to the exact bottom and exact top. Like I said, it works in zones. So when I'm looking at an area of support or resistance, I want to see the areas of the market that are reversing pretty heavily is what I'm thinking, even if it's close to that area. And so I would use candle wicks and I would use candle bodies to find these regions where the market is probably going to reverse it. Let's give you an example here. Up here, there is a wick right up there. If you were to bring down this line right here, you can see near this high, there's also a wick here. There is a wick here, and there is a wick here. So this is a potential area of reversal. If you bring it further down, however, what you're going to find here, again, remember, I started using candle bodies and candle wicks to find the best areas. If you were to put a line at 158.42, you have a top right here, you have a top right here, you have a candle body top here, a candle body top right here, you have a candle body top right here, and right here, and right here, and right here. So looking at my chart, I would reason with myself and say, hey, markets are working in zones. I'm seeing a lot of times the markets will reverse a little early off of maybe candle bodies or candle wicks that are a little bit lower. So I said, if price comes up and touches either one of these levels and retraces, that's my move, because the market works in zones. So I added that to my methodology. So you can see what I'm doing here. I'm just beginning to add things to my methods that make sense to me. So I've got this. Now I've got a zone up here. And I think to myself, if we ever come back into the zone, I will begin to sell here, 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 or maybe right here and right here, or maybe right here, and right here. But that's my zone that I get into the market. Same thing goes down here for the bottom. The only other area where I'm really seeing wicks and candle bodies is going to be right here. You've got two candle bodies and wicks. And by the way, that's a pretty big spread. Typically not a big fan of entering the market at this big of a spread. If I am, I want the reward to be pretty darn good. But anyways, you can see what happened here. We bounced off of this zone right here. Where did the market stop at? The market stopped at the two candle bodies. It doesn't always stop at the exact high or the exact low, and it doesn't just use the wicks. You have to work in zones. If you don't know that, you need to understand that. That is gospel truth to me when it comes to my trading. I will not venture away from that. I mean, that is about as much truth that I can dish out to you today. I mean, I believe that with every fiber of my being. So, but price came back down to this, and so I saw the bounce, and I said, you know what? It hit the zone. So it did hit my support. But this is what I was seeing on my chart. Now let's get rid of that. Let's get rid of that. And let's get rid of that. And let's even get rid of that. Now let's focus on this level. You can see a wick right here, a wick right here, a wick right here, and a wick right here. And now if I'm looking for another area of maybe where the market might reverse that, I have a candle body right here and a candle body right here. Other than that, you have to go all the way down to here. And again, I don't like my spread being that big, so I reasoned with myself. We went up here, we pulled back to here. We hit it again, we pulled all the way down to here. We hit it yet again, pulled down here, came all the way back down here. We popped all the way back up to it right here. See the wick? It's hard to see with that line in there, or with that moving average, but we popped all the way back up to this red line right here, and then we fell down again. What happened next? The candle body closed on that same line again. We rallied up, and then you have the top of this candle body right here. So you have a candle body here, a body here, and a wick here. That's 3 points, and you have 4 up here. So I said to myself, that is good enough for me. So what happens? The market came into the zone. Now, prior it looked like, hey, we blew through resistance, when really we didn't. We came up to the zone, and the market respected the zone, and the market came back down to what I have as monthly support right here, which is a whole nother story. These are my bands that I use. But you can see it dropped from 127.20 all the way down to 119.20 or so. You are dealing with, what is that, 800 pip fall? That's a pretty big deal. That's a nice little return on your money. So again, but that's the second thing I understood. I understand that the market worked in zones. So I added that. And I continued to add different things to my methodology. One of them eventually was, hey, I'm noticing the best levels are happening at the bottom and the top of my chart using a certain candle count. This is proprietary, so I'm not going to tell you what that is on this video because this is a free video. But there's a certain candle count, and when you have a top or bottom on your chart with a certain number of candles on your chart. This, by the way, was found by accident. But when I have a certain number of candles and I hit the top or the bottom of my chart, such as this top or bottom, when price retraces, those hold up unbelievably well. The success rate alone on that is just incredible. So now I'm thinking, well, you know, the pivots, maybe I don't want to just do pivots in the middle of my chart. Maybe I should focus on the tops and bottoms of my chart, and maybe I should work in zones. Those things together help me create the beginnings of CRT, but that was not enough. I still wanted, I still had to add other concepts. Like, for example, one of the things I added was I noticed maybe price hit it once right here, and then it hit it again, and then hit it again, and then hit it again. We all know at some point that if you continue to hit a resistance level or a support level enough times, it's going to break. So after a certain number of times being hit, I decided to take that trade off the table and not trade it even if it was at the bottom or the top. And again, especially trading on the lower time frames, which is what I did initially with CRT. Now mostly it's 4 hours and up. Sometimes the 1 hour time frame I'll do even. But once I added that, that added a lot. That probably added a good 10 to 15, maybe even 20% to my success rate. So that helped a lot. Another thing that I added was something called max moves. And this is basically where the market is really, really far away from its median and it needs to come back in. So imagine for a moment, if you will, we have a level like this. And price is marching back up to it. When you are really far away from the median, which acts as a magnet, I'm not going to tell you what it is in this video. We're not going to go into tons of detail on a lot of this stuff here, but once you get so far away from the median, guess what? It acts as a magnet and it needs to pull back in. So when I added that, again, that increased my success rate a lot as well. There's a lot of different things like that that I added to my trading plan. It wasn't just, hey, this over here is really good, so let's just, trade off of that. No, I needed a lot of different things that told me, hey, this is going to work. And it's called confluence. You need a lot of things at the same time, same level, saying the same thing. And if you're able to come up with that, then guess what? You're going to find yourself getting into some really, really nice trades. Another thing that I looked into was this, and this is kind of a freebie. I'll go over this real quick here. Back to this dollar-yen monthly chart here. Another thing that I noticed was the fact that if you had a quick V-shaped reversal, those areas did not work as well as support or resistance as something like this, where you have a very extensive, this is almost like a head and shoulders bottom pattern. And when you have a lot of buyers and sellers fighting over price for an extensive period of time, when price comes back down to it, it acts as very strong support. And that is something that I noticed, once I got going further on into CRT, because sometimes I would see reversals like this and price would come back up and I'm like, why the heck didn't that work? And what I began to notice is when you have really big areas of congestion, the market's much more likely to reverse off of it. Example right here, this is a monthly chart. This took at least, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. Basically a year and a half. This is like a wedge pattern, by the way. It basically took a year and a half to create this bottom. So what do you think is going to happen if price were to come back down? It's absolutely going to hold up as support. So I began to notice that too. There's some other things. Market structure. I've got something I created called minor structure levels, major structure levels. A concept in the market called exhaustion. There's just a lot of different things. And the more of these things that I put together and have at the same time happening at the same levels, the more likely that I'm going to win the trade. There are some trades that I will see setting up in the market, and when I see them, I know with 95% plus certainty that these are going to be winning trades. I said 95%. It is, like I said earlier in the video, it is December 18th. The last losing swing trade I had was back in April of this year because I try to stick to those that are 95%. And the trade that was not a winner back in April, the only loss I've had all year as a swing trade, it was not a CRT. It was not the best setup, but I decided to get into it. I knew it was risky. But I also knew it had a pretty good chance of reversing. So I jumped into it, and it did go just past my level. I guess some would call it a massive stop run, and then it came back down and reversed. So I could have easily won on that trade, but I was a little bit, impatient. So, but I mean, other than that, I mean, there are levels you can look at, and when you have all of these things setting up at the same time, at the same level, your win rate is going to be outrageously high. But again, the purpose in this video was not to brag about what an awesome trader I am or how many wins I've had this year. The point is, when you are creating a trading methodology, you need to find something that works to a pretty good degree, and then you need to add to it. Again, like I said, you'll notice I started off with just a level. I'm looking at levels, and then I said, hey, what if I add this to weed out some of the losers? What if I add this? What if I add this? And what if I add this? And when all of these things come together, it is a winning trade almost every single time. But when you're creating a method, make sure you're doing that. Make sure you have a lot of confluence. Make sure you're, using a lot of common sense, because as you can see, a lot of these ideas that I came up with, I mean, they're not, it's not rocket science by any means. It's common sense. I mean, it's not real difficult to come up with some of this stuff, but you do have to think outside the box, and you got to use your brain a little bit. You can't just say, hey, let's see, this guru over here is telling me this, so let's believe this is gospel, because a lot of the stuff people teach is nonsense. It doesn't work for them, and so they're selling courses to, well, hopefully make a little money that way. So, but anyways, before I get too off topic here, I just want to show you this video so you can kind of get an idea of how I came up with the methods that I created to trade. And again, the purpose in this was to hopefully help you to understand how you can create your own methods and move from being a losing trader if you're currently losing, or break-even trader if you're break-even right now, or even if you're a winning trader, to become an even better trader. So that's the whole purpose in this video, but hope you got something out of it. As always, feel free to contact me, or you may also leave comments below on the video, and I am more than happy to help you out. Thanks, guys. Have a wonderful end of your 2018, or if this is later on, well, have a great rest of the year.